We have our business confidence survey, which is a very well regarded and comprehensive survey that's quite extensive across industries and geographies, and it's at a 3.5-year high off the election of the new government. But the real question is, will that flow on to genuine economic activity? Because we've had, although there's no question that our economy is outperforming just about any other developed economy in the world on just about every metric, it's been a pretty patchy sort of performance in terms of economic activity, and business credit growth, for example, has been at a 30-year low. So we don't have that environment yet that's powering forward, because confidence is fragile and it's psychological. And if you want to have that sort of daily menu, this week we can panic about inflation, the RBA minutes, unemployment, building approvals and credit approvals. Then next week I'll start panicking about bond yields and retail sales, job ad surveys, consumer sentiment. The following week I'll start to panic about the Australian currency, Chinese PMI data, US non-farm payrolls and ECB minutes. Next week I'll schedule in some panic about the Fed minutes and the GDP figures. And this creates this whole concept, am I winning or losing? Almost daily, and that is simply not how you run a business. They are important indicators and they give you a sense about where they're going. But does it really frame the long-term positioning of a business? When I took over 5 years ago, we really made 4 big strategic decisions. We wanted to differentiate ourselves on reputation and try and be the bank, at least amongst our competitors, that was the most ambitious in doing the right thing by our customers, whether it be the right thing in terms of fees, the right thing in being the most active lender to business during the GFC. We wanted to charge out and really lead on reputation. We wanted to focus on our core markets in Australia and New Zealand, because we felt that's where our true competitive advantage was. We wanted to rejuvenate our retail bank, which had not been performing as strongly, certainly as our market-leading business bank. And we wanted to make a very substantial investment in technology. In the 5 years since we made those calls, absolutely nothing in that daily menu of panics has even remotely changed our idea that they were the right 4 things to do. As the largest business bank in Australia, I interact with hundreds of businesses every month. And they too take a long-term view. They are making decisions that stretch well beyond what might panic them in the morning. And they understand, for example, that this is not a 2-speed economy and never has been a 2-speed economy. In fact, one of the things that's been damaging to confidence is the constant reference to a 2-speed economy. Because people suddenly say, oh, I'm not driving a mining truck in the Pilbara, I must be losing. That's not the case. It is a 10-speed economy. It always has been a 10-speed economy and always will be. And it's a very simple equation. At any point, if you go back in economic history, there will be 2 industries that are performing well. There will be 2 industries that are struggling, and there'll be 6 in the middle that are either slowly transitioning, having neither their best year nor their worst year. The reason that industries are at either end of the spectrum are from many, many factors. Technology, for example, is a major factor. If we were having this lunch 100 years ago, it is fair to say the blacksmiths would be at the bottom end of the spectrum, and they would be on whatever the version of Twitter was at the time, demanding industry subsidies to preserve that industry, as the automobile industry, clearly at the other end of the spectrum, was growing. But that was not a rapid transformation. Customers talk to me a lot about the impact of digitisation, the impact of the internet. But of course, bear in mind, we're now in about the 15th year since there's been commercial activity occurring. So that may be having a profound effect on your business. In fact, maybe to the point where your industry will be actually out of long-term prospects, but it's been 15 years coming. Much as you can't go anywhere at the moment without falling over someone who has an opinion on the housing bubble, you're also never far away from people who are crying for a need for long-term reform. We need long-term reform. Everybody's got an opinion. We need long-term reform. And the list of what people are calling out is very consistent. We need tax reform. We need a comprehensive development of infrastructure, both hard and soft. We need development of our trade relationships, and particularly critical free trade relationships. We need investment in productivity and technology. And we have this almost misty-eyed view that the reforms that have actually set up our economy, not just in the last 20 or 30 years, but some of the profound reforms we've had even going back further than that, in terms of things like our migration program post the Second World War and the elements of industrialisation that flow from that. We have this misty-eyed view that it was all achieved harmoniously and bipartisanly. Right? Well, it most certainly was not. And the harsh reality of real reform is there will be winners and losers. So the general tip is when someone says no one will be worse off, no reform to be seen here. Now, that does not mitigate the genuine social and human impact of people who may be at the wrong end of reform. And it doesn't happen smoothly and easily. The automotive worker in Geelong that loses their job on Friday does not become a healthcare worker on the Sunshine Coast on Monday. It is not as easy as that. And we must, of course, as a civilised society, have in place programs, support and assistance to work through and mitigate the impact of those that will suffer from the reform process. And we must be making sure that the reform is in fact generating far more winners than it is losers. But the harsh reality of the reforms that have set this economy up is it has meant a transition. What we have to do as business is we have to be prepared to stare down and aid in the process. We need to aid politicians and work with politicians to drive reform. The challenge to business, of course, is that we are not going to get everything, okay? If we descend into the individual wants and needs of each industry, then by definition, we are going to be very, very susceptible to dividing and conquering. And the Business Council put out an excellent blueprint for reform that takes a much more holistic review. It will not get everything that we want, but business must recognise that the thing that we will all benefit from is a growing and vibrant economy. And therefore, if we speak with a united voice and recognise in some cases we may not get everything we want from an individual industry perspective, we will benefit from the rising tide of a buoyant economy. There is always a reward for a long-term focus. Yes, short-term popularity can often be followed by a very long-term recognition that you short-term the business or you short-term the economy. Enduring acknowledgement is generally created and a stronger foundation is created if you take the long-term view, even if it makes for some short-term pain. Now, the latter, I can assure you, is far more relaxing in retirement because you don't have to spend all of your retirement years defending your legacy. It defends itself.
What's the retail strategy for year 2014 besides pricing that will give you a competitive advantage over the other major banks?
Well, I certainly think, let me just talk about in two categories. We are the market leader in business banking. We have very strong industry specialisations in a lot of key industry segments: property, healthcare, government, agriculture, to name a few. And we have simply more bankers in more places and a demonstrated track record of supporting business. So we feel that combination of genuine industry insight and just far more points of presence is a strong point of competitive advantage. Yeah. In terms of our retail bank, I mean, the reality is, as we've launched our most recent advertising campaign, we have done more than any other major bank in the last 4 years. We're the only bank to have addressed many of the fee issues, the only bank to undertake many of the reforms. We've had the lowest standard variable rate for over 4 years. So the reality is we have demonstrated a very, very resilient strategy that has paid dividends of providing consumers with what they want in the retail bank, which is a comprehensive digital platform and a very transparent, no fee and interest rate offer, and what business customers want, which is more bankers with genuine insight.
How do you go about reconciling the principle of economic efficiency with social responsibility?
We have an obligation as a major organisation to play an important role in improving the social infrastructure of Australia. And the view we've taken is that it is very easy to garner headlines by talking about this stuff. It is far more important and important to your staff that is driven by authenticity. To pick one example, you quite correctly at the beginning of your introduction, Phil, acknowledged traditional owners. We take our obligation to help and promote Indigenous issues as very important. We have now launched 5 reconciliation action plans. I've launched all 5. They have very specific, and the most recent one has 23 specific initiatives regarding uplifting the Indigenous communities, ranging from the provision of roles, traineeships, microfinance, supporting a whole range of issues. And when I go to the point about actually being the doing rather than saying, is that we are the only organisation in Australia to have been awarded the highest level of recognition from Reconciliation Australia, because we're the only organisation in Australia to demonstrate CEO, board and management committee commitment, and that this year, the reason we received it is that we have been more than prepared for our reconciliation action plan to be independently audited publicly to determine whether or not we're meeting the 23 targets.
Okay, your breakup campaign was controversial at the time. How successful has it been, and what's the next game breaker for NAB?
Well, it was successful in many respects. It was successful because we added over 1 million new customers. We moved from a distant fourth in customer, and a very distant fourth in customer satisfaction to a close second and a points first in customer satisfaction. So that increase in market share came with obviously a lot of other benefits as well in terms of customer satisfaction. And it was also, as I said, backed up by some very, very clear points of difference, which have by and large not been replicated by our competitors. They continue to engage in the charging of fees and things which we've long since dealt to. And so the next wave is, of course, our More and Less campaign, which we launched on Sunday, which is just taking the opportunity to remind customers that had you taken advantage in the last 4 years of, just simple example of being a home loan customer with our bank versus the one that charges the largest SVR, that you would have saved some nearly $2,500. That is not an insignificant amount of money for a family. And so that is what the next wave is, just reminding people that, if you had not taken advantage of being a NAB retail customer, you are $2,500 worse off. If you want to be $2,500 worse off in the next 4 years, stay where you are. If you'd like to save some money, come to NAB.
How do you handle the differentiation between the RBA and the full transfer of interest rate rises?
Yeah. Well, first of all, the banks have done a very poor job at explaining actually how they're funded. And when the banks, during the benign times of, sort of the mid-90s through to the GFC, when obviously funding markets were open and spreads were very, very small, were in a position where they were, effectively lazily outsourcing that issue to the RBA and simply following along. But if you look over the last century, that was the aberration, not the norm. In most cases, bank interest rates have moved quite independently of central bank movements because they were actually related to how banks fund themselves. We have more savings customers, for example, than mortgage customers, and of course, as much as you get complaints from mortgage customers, you equally get complaints from depositors when interest rates go down. Certainly in the most recent interest rate movements, we have moved quite quickly. As I think customers rightfully say, if you're going to make a decision, even if it's outside of the RBA, make it and let us have the benefit one way or the other. And that's what we've been committed to doing.
You've said there'd be winners and losers from reform. The same can be said of digitisation. So how is NAB ensuring it isn't disrupted by digitisation, like so many other businesses have been?
Well, we made a very, very large commitment 4.5 years ago to a complete transformation of our technology environment. That is a program that has been continuing. It maintains a very senior focus in our organisation. It is, by definition, a large and complex program because you are replacing some 40 years of institutional legacy environments because, let's face it, 40 years ago, your banks implemented mainframe systems on the premise that you had probably a loan product and a savings product, and that was it. And over the subsequent 40 years, we've added a plethora of products, we've added many, many more channels. And of course, what that's meant is that all banks around the world, commercial banks, have built up a patchwork quilt of technology that hangs off the back of that core system. At the moment, people are trying to pick winners and losers in the bank technology race, and they're sort of judging that on who might have an interesting app. It's far more complex than that. Educated analysts around the world know what's happening, and I can guarantee you that in 5 to 10 years there are going to be some very clear winners in this industry and some very clear losers. We've got no doubt we're going to be one of the winners.